and welcome to the EisnerAmper Engaging Alternatives podcast series. I'm your host, Elana Margulies-Snyderman, and with me today is Rosalind Bazany, partner and head of ESG and impact at Antler, a Singapore-based global early-stage venture capital firm that invests in emerging AI businesses. Today, Ros will share with us her outlook for investing in emerging AI businesses, including the greatest opportunities and challenges. She will also share how the firm integrates ESG and more. Before we dive into the conversation with Ros, don't forget to hit that like button and subscribe to EisnerAmper wherever you listen to your podcasts. And you can also find us on YouTube at EisnerAmper. Hi, Ros. Thank you so much for being with me today.
Thanks for having me, Elana. Great to be here.
Absolutely. So to kick off the conversation, tell us a little about yourself and how you got to where you are today.
Sure, happy to. I think my journey is definitely not the sort of typical VC origin story. I actually trained as a chemist and fully expected to spend my career in a lab, but I somehow ended up in finance instead. I started at a hedge fund right as the financial crisis hit, so it was certainly an interesting time to begin my career. From there, I moved to Schroders, first in London and then Singapore. And then 4 years ago, I made the jump into venture capital and joined Antler. Now at Antler, we're not just looking for companies solving sustainability problems. We're also helping early stage companies use sustainability as a competitive advantage. So whether that's through better data governance, smart supply chains, or just building a culture that attracts top talent. For us, and I think why I love Antler is that we often invest at inception. So sometimes literally before a company exists. So we get this incredible front row seat to really watch how ideas actually form and how founding teams gel before they go to market. And we can anticipate where cracks might appear in things like governance or strategy and actually help them fix it early.
At EisnerAmper, we are creative problem solvers that take a 360-degree approach focusing on you. We're an award-winning firm with decades of experience providing accounting and advisory services. EisnerAmper. Let's get you ready.
So, Ros, given Antler's focus on VC investing in emerging AI businesses, I would love to hear your high-level outlook for the space.
There's a lot to say. And I can see why you're leaning more into the AI piece, because Dealroom actually called us the most active AI investor globally, which is technically accurate, but I think there's a bigger picture here. We're actually the most active early stage investor in the world, full stop. So we're looking at 160,000 founder applications every year. And then we're backing about 400 companies across 30 locations around the world. And I think that selectivity really matters because otherwise it's just creating noise in VC. But back to the AI piece. For us, AI isn't a sector that we're investing in. And it's not some sort of hype wave that we're trying to ride. This is the fastest rollout of a general purpose technology in human history. Think of it like electrification or the internet, but it's compressed into a timeline that's almost vertical. And that pace completely changes the rules for everyone, be you a founder, an investor, or a regulator trying to keep up. Now, we categorize companies into two buckets. So those built on AI, where the model basically is the product, and then those that are AI enabled. So where AI sits inside a broader tech stack. And we invest across both, plus all the infrastructure that makes it possible. And then a lot of people ask me, why do VCs love AI so much? In my view, I think it's because it's so practical. You get leaner teams, faster go to market, better capital efficiency, and then customers who actually benefit from the product. So one example of our portfolio company is Lovable. If you haven't heard of them, they essentially allow anyone to build an app or a website more than 20 times faster than traditional coding. And they went from 0 to unicorn status. They're now valued at 1.8 billion in 8 months. 8 months. That timeline was literally impossible a few years ago. And so VCs are going to face intense competition for these kind of winners. So I think timing and getting in early really matters. Now, you asked about the outlook. So I'll give you a very quick take for the next wave. It goes beyond LLMs and content generation. 2023, 2024, that was very much the kind of chatbot era. But 2025 is definitely the start of the reasoning and autonomy era. So we're looking at AI for science, discovery and materials, biomedicine. We're looking at physical AI that adapts in the real world, particularly in robotics. We see early work in quantum-assisted AI for specific optimization problems, and then different compute architectures like all-optical computing that could completely transform latency and power costs. So a very exciting outlook for where this world of AI and beyond is headed. And I think for us at early stage, we get to meet the people who will define these new categories before anyone else even knows their names. And, for me, that's without a doubt the best seat in the house.
And Roz, more specifically, what are some of the greatest opportunities you see in your space and why?
Great question. And I've just sort of hinted at the fact it's incredibly broad. But when I look at where AI is creating the most real value today, I think there's two areas that really dominate, and that's climate and health. And I'm going to mention just a few companies within our portfolio to try and bring this to life a little bit. So in climate, the bottleneck isn't renewable energy generation and cost anymore. It's actually grid infrastructure. And we invested in a company called Archeon that uses computer vision and predictive models to spot faults on power lines before they cause outages and to re-optimize where repair crews go. And that's something that directly enables more wind and solar integration. Then you've got inductive robotics. They're tackling a completely different choke point. They're building autonomous EV charging to actually remove friction from electric vehicle adoption. Then if we think about healthcare, we're shifting from reactive treatment to precision prevention. Kivira, a company in our US portfolio, is building objective diagnostics for mental health. And this is huge because misclassification in this space is not just really common, but it's also really costly too. And then one more just to mention within this sort of health space, Interhuman is adding social intelligence to AI by teaching systems to read vocal and visual cues. So tools that can actually work more effectively in things like therapy or coaching and customer support.
Roz, on the other hand, what are some of the greatest challenges you face in your space and why?
Okay, I'll stick with AI here. I think the hardest challenges aren't technical anymore. They're really about consequences. So what happens when AI actually works exactly as designed? So you've got some risks that are front and center, data quality, algorithmic bias, privacy violations. But then the trickier ones operate in the background, like the human labor behind training data sets. Who's doing that work and under what conditions? Or how centralized our AI infrastructure is becoming, or how fragile our compute and power supply chains really are. And we saw this sort of dynamic play out with crypto, where things like energy consumption became this massive reputational anchor. AI is heading for the same scrutiny, but it's going to be at a scale that makes crypto look absolutely tiny. I think trust and cybersecurity can't be afterthoughts anymore as systems become more autonomous. So meaning that they take actions without constant human oversight, the blast radius from errors or attacks grows exponentially. So identity verification for content, access controls, real-time monitoring that can stop misuse mid-session. These need to be core product features and not something that just get bolted on after a breach actually happens. I would like to highlight one other topic that's getting a lot of attention in the industry and is discussed often within Antler, and that's dual-use AI. So where technology has both commercial and military applications. So we're talking robotics, drones, advanced sensors. It's not inherently bad, but it does create different categories of risk that we need to think about. So you might back what looks like a straightforward logistics platform, but then later realize it could be adapted for military purposes or surveillance systems. And some of that is perfectly legitimate, but the potential consequences are much higher. So at our investment stage, we're not just backing the product, we're also underwriting the founder's judgment about how their technology might be used and their ability to navigate those complexities. And I think from a more generic ESG perspective, the real challenge for us is just keeping our risk frameworks adaptive. With every technological shift that's happening, it creates new categories of risk faster than our playbooks can actually evolve. And in VC, the way of kind of thinking about sustainability, it has to be an operating mindset rather than something that's just static or compliance related.
Roz, that segues nicely into the follow-up question I had for you. In your role as head of ESG at Antler, how do you think about that topic as in your investment remit and at the firm as a whole?
Well, for anyone interested in diving deeper into this, you can go onto our website, take a look at our report that goes into a lot more detail, but I'll try and give you the quick sort of 1-minute overview. We completely rebuilt ESG for early stage tech companies. We didn't want to just adapt frameworks for public markets. So we have things like our due diligence screens for obvious exclusions. We assess material risks and opportunities, but it's based on unique business models and growth stage and sector dynamics. Post-investment, we use our sustainability health check. So this is a proprietary monitoring tool that we developed. It establishes a baseline or kind of benchmark for our companies. It maps priorities and it guides targeted improvements that are suitable for a company's growth stage. And then founders get practical toolkits and workshops so they can actually integrate what actually fits within their business reality and can help them succeed. All of our funds follow a consistent global policy, and we provide training for both founders and our internal teams as needed. And the important thing is we track results carefully. So as I mentioned, our report, within that, we demonstrate a clear correlation between deeper sustainability engagement or integration and stronger funding outcomes. So high evaluations, better success rates, raising follow-on capital beyond Antler. And I think that's a pretty strong signal to the market that sustainability is driving or at least linked with better returns. And for me, that's incredibly exciting.
Roz, we've covered a lot of ground today and wanted to see if there are any final thoughts you would like to share with us.
I think that we'll soon just stop saying AI companies, just like we did with stop saying internet companies. AI is going to just become this invisible foundation layer that everything else builds on. I think the real opportunity is in redesigning how systems actually function. So not just making them incrementally faster or cheaper. And I think that's where ESG thinking becomes this kind of secret weapon, superpower, whatever you want to call it. It's really this methodology for seeing around corners, catching weak signals before they become expensive problems. And the companies building this type of discipline or muscle from day one or at the early stage, they're learning how to get the best out of AI and they're learning to build it thoughtfully while they scale. And that's the real competitive moat in a very crowded field.
Roz, I wanted to thank you so much for sharing your perspective with our listeners.
Thanks for having me, Elana.
And thank you for listening to the EisnerAmper podcast series. Visit EisnerAmper.com for more information on this and a host of other topics. And join us for our next EisnerAmper podcast when we get down to business.